think one of the things I need to learn is to be comfortable with silence and comfortable with taking time to figure out an answer to a question. I find myself when I'm being asked questions, interviewed, that I just go, I just speak. And often in retrospect, when I rewatch a conversation that I was having, an interview where I was being asked questions, I get annoyed that I maybe left out something important, something that if I'd maybe taken 5 seconds to think about, I would have been able to actually recall from my mind and release. I think part of my fear is the concern that when I make a video like this, a vlog, video blog, that the spaces where I keep quiet might be frustrating for the viewer. So I try to get out as much information and knowledge as possible without leaving gaps. But I think it's fundamentally important, especially with technical subjects, because I don't write notes generally, which is something that I probably need to start doing. I just didn't like the idea of reading, because if I'm reading, I may as well send it to anyone to read for me, or I can just post it as a tweet or as a Facebook post or post it on LinkedIn. I like the idea of speaking off the cuff. I think it's more authentic, more genuine. And if I mess up, if I talk shit, at least it's real. Can always apologize later. But in the interest of trying to improve as a YouTuber, as a TikToker, as a person that creates content that is educational, that is transformative, that influences and challenges minds and thoughts and ideologies and philosophies, that maybe I should be comfortable taking a step back, taking a breather, doing better research than I could, and not just speaking from my brain and from my knowledge database. I have had conversations with a lot of people around the concept of investing in the stock market, buying shares, as it were. I normally hate that I have to reference my educational background. I hate it because my educational background should not be important, number one. And number two, even the fact that I'm raising it does not necessarily speak to my credibility. I studied accounting and economics at Rhodes University. I did my honors in accounting at the University of Johannesburg. In the studies, of course, I did economics, and in economics we do finance. And in all of that, you do touch on, the idea of a share, a stock, a piece of a company, how it is valued, the different valuation methodologies. Obviously, we do financial statements, your cash flow statements, your income statement, your balance sheet, statement of changes in equity, and the like. And you learn all this terminology and jargon. And to be fully honest, for many people, after they leave tertiary, they forget a lot of that stuff. If you're not working on it on a regular basis, if you're not reading up on it on a regular basis, you forget. It is more credible to listen to someone who did not study finance and accounting and economics, but who is engaged in the stock market, who reads newspapers, the business newspapers, who is watching Bloomberg, CNBC, who's reading Forbes, who is engaged fully, or who's even working in a company where they are pushed to study these things on a regular basis. They are more credible. That's not got nothing to do with your education. Anyways, I digress. So I studied that. I went to work in banking. I've studied the stock market locally, abroad, the different indices. An index is basically where the companies go and list. In South Africa, we have the Johannesburg Stock Exchange. We should probably have two more. We are a very lucrative country, and we used to be the gateway to Africa. And it would be nice if all African countries came to list here. When you list, companies list because they are, number one, trying to raise funding. Because when they list, they get to share, they get to sell pieces of their company to the public. Well, they start with an IPO, an initial public offering to an elite group of investors, but then they have a public offering to everyone. And then they raise funding in that way so that they can carry on doing their work as a company, and also to have credibility for the company so that the value grows, so that it's easier for other people to do business with them because they are a listed entity. And when you are a listed entity, there's compliance and regulation you need to follow. You need to be as transparent as possible about the deals you're doing, how much you pay your directors and certain people, how your operations work, etc., etc. Anyways, again, this is a whole lot of unnecessary information, but it's trying to paint a picture of, like, I'm not coming here to just fart. It's because I'm actually engaged in the subject matter and I'm very passionate about business, passionate about economy. I study some of the biggest companies, some of the smallest companies. I'm a huge fan of many entrepreneurs, big business people, kids that are hustling, that grow their businesses into something really special. I had dreams myself of becoming a very seasoned business person. To date, one of my wishes is to become a commentator on the business world and on certain companies. Bruce Whitfield is popularly known in South Africa. If you look at Robert Marawa in the soccer world, I would love to be a Robert Marawa of the business world and the economy, and over time maybe of politics as well, and just how society operates. This is why I engage with human beings. I have an aggressively intense passion for the human experience. I do not believe in investing in shares and the stock market. This is my personal belief. And I've been asked by certain people why. When everyone is telling us you should have a share portfolio, you should invest for the long run, I'd say, why do you not believe in that? Back in the day, like almost everything that exists, there were good intentions. Good intentions. When people started the whole monetary system, it was to make things easier so that we do not have to barter, so that you don't have to carry a sack of maize and someone has to constantly carry their chickens, so that when you need something, you can trade. They said, let's come up with seashells, precious metal coins, papers, papyrus, etc. Pieces of paper written IOU, so that it's easier to transact. Good intentions. Later on, the money system has been infiltrated with toxicity in the form of interest, speculation, compound interest, inflation, etc. The share space, the idea of me having a company and giving off pieces of it to other people was done with good intentions. Number one, I get to raise capital to carry on building. Number two, I get to share my success and my value with other people. And my hope is that when I share with people that can also add value. So you want to sell shares not just to someone with money, but someone who has skills as well, so that they can come in and sit on your board and influence certain decisions for a positive. You want to sell shares to someone who has a network so that they can help your business get into certain markets. If you look at Facebook, when they sold the stake to Peter Thiel for $500,000, not only did he give Mark Zuckerberg and Eduardo Saverin and Sean Parker money in exchange for equity, he also said, I will put you on 5 continents. I have the reach, the network to be able to take Facebook global. Oh, that is exciting. So these things were done for noble intentions. And for the longest time, when you buy a share, you had a piece of a company. It could be if a share has 1 million shares, if a company has 1 million shares and you own 10 of those million, that is your little, I own Coca-Cola, I own KFC, I own South African breweries. It's something unique, it's special. When you see the company doing well, when you watch DSTV, when you see people drinking a lager, when you see people walking into Chicken Lick and you're like, I own a piece of that business. I'm proud, I have a share portfolio. When I hear that a certain construction company, Group 5, Marion Roberts, has just won a tender to build bridges, you're like, that's my company. I own a stake there. It makes you proud that you are invested in your economy, whether locally or offshore, abroad. I'm invested in the economy. And if I hear that Tesla has expanded to China, I'm like, I have shares in Tesla. This is exciting. And because of the money I use to buy the shares, Elon Musk and the rest of the team can grow and become great. I have a stake in Amazon. I have a stake in Walmart. And those companies would then, with the money, grow the business. And in growing the business, they would be transparent. And they would show in the financial statements, in particular the income statement where the money comes in and the money goes out, and the balance sheet where they show your assets that you have and your liabilities that you own. You could be able to track exactly what is happening with your little share, whether it's 500 Rand, whether it's 10,000 Rand, whether it's 500 million Rand. And in return for holding a piece of this company and almost loaning them money, number one, you would hope that the value of whatever you bought, your 10,000 Rand in share value, because the company is doing well, is now worth 20,000 Rand. And at any given time, you can transfer this to someone else and make a profit. It's like owning a house. You hope that the house will appreciate in value and you'll be able to sell it one day at a profit. That's the one part. The second part is dividends. And dividends is almost like an interest payment for loaning us money. because you bought shares of 10,000 Rand, at the end of the year, if the company did well and made a profit, we'll be able to, for every share that you own, give you a few cents on the share. Headline earnings, earnings per share, etc. And then you would say, because I have 10,000 Rand worth of shares, they've declared a dividend and I'm going to be earning 200 Rand off my 10,000 Rand. That's exciting. If I had 100,000 Rand, I'd be getting 2,000 Rand in shares. If I had 1,000,000 Rand, I'd be getting 20,000 Rand. If I had 10 million Rand, I'd be getting 200,000 Rand in dividends. So you want to have a portfolio that is worth 20 million Rand, and where every year maybe you're getting 1,000,000 Rand in dividends, and you're like, this is a brilliant investment. It was a good idea, it was well run. Unfortunately, human beings, and especially greedy capitalists, always look for loopholes on how to exploit and to trick and to scam the people out there who are ignorant. Number one of my issues is the fact that so many companies force people to have a pension and have retirement annuities. They force them. You do not choose. It is not optional. What becomes optional is how much more you want to add per month. I'm earning 40,000 Rand a month. I'm forced to put in 4,000 Rand a month into a pension fund with the company. And the company also does not allow you to choose who they deal with. Whether it's Alexander Forbes, whether it's Old Mutual, whether it's Standard, it doesn't matter. They force you. They're like, this is who the company invests with. Which means those people are going to earn fees because you are forced to give a piece of your income, which you've worked hard for, with this company. And on top of that, there are laws in South Africa that do not allow you, even upon retirement, to pull out all your money. They force you to keep some money there. Understanding that the death rate in South Africa, the average death rate is 60. The retirement age is 60, so they know you won't live for much longer. Your money is going to be swallowed into these pension funds, and they will get to bank your money. Your money that you've worked hard for 20, 30, 40 years in employment. That makes me angry, and I feel that those laws are unconstitutional and not enough people are fighting them. But someone would argue, but it's to protect people from themselves. Again, a lot of these things were done with good intentions. Unfortunately, because of evil people, you cannot say, I can prove I'm intelligent, I'm smart, this is my money, I understand the consequences, I want all my money. The law does not allow you. It makes me so angry. That's the one part. A lot of people are forced to invest, and they're forced to invest through a lot of these companies that make fees. Whether they make money for you or whether they don't, does not matter. The second part is share trading has become gambling. And educated people will tell me, what do you mean? It's gambling. It's educated gambling, of course. It's informed gambling. For most people. Not for most people, no. For some people. Specifically, if you're a stockbroker, you should have a license and you should be qualified to be able to read financial statements, read what's happening in politics, read what's happening on the ground, have forecasts for the company and understand, and then decide we're selling this company, we're buying this company, we're shorting, we're going long on this share. And then all the other fancy instruments which have also made this space very toxic. For the average retail investor and trader, the day trader, the swing trader, etc., they don't know these things. They don't understand these things. They don't read. They don't have inside information. They don't attend the conferences. They don't have close relationships with the executive, etc. So it becomes gambling. You go and play the lottery. You don't know what's going to happen. It's a gamble. You go to the casino. You put money, blackjack, poker. You play with the slot machines. You're gambling. You don't know what's going to happen. You go with forex trading and you want to trade the Japanese to the US dollar. You're not really studying the market and the climate in Japan. You're not studying the market and the climate in the United States of America. You don't know what's happening on the ground. You're gambling. Same with the stock market. SAP looks like a good company. People are always drinking. Let me buy shares. People are always building. Let me go and invest in PPC cement. You're gambling. You don't know what's happening. The fact that it is regulated, the fact that there is a Johannesburg Stock Exchange, and there's the FCSA, which is meant to track these things, you are still gambling because you do not know the outcomes. You put money in hoping that it will either go up or go down, but you do not know what's going to happen and you do not have control. But similar to the lottery, the casino, similar to forex trading, crypto, stock trading, if you put in enough investment and you study and you learn and you track, of course you minimize the risk, you mitigate the risk. But generally it is gambling. It is a different type of gambling. In forex, there's leverage, where $1 is equal to $100 or $1,000, which means your money grows exponentially quicker or you lose money exponentially quicker. Something that we were discussing with Usandile Shezi on the panel show. But it is still gambling. And people are like, no, it's not. You don't know what you're talking about. I'm like, I know what I'm talking about. Study this thing. You do not have control is one of my issues. Like I said earlier, there are all these spin-off. If you watch the movie The Big Short, they come up with these really cool analogies to explain some of these concepts, derivatives, ETFs. I know in forex trading, there's binary trading. I'm just trying to think. There are so many spin-off CDs, I think. All these weird things you can invest in from the shares themselves. And if you watch the movie The Big Short with Ryan Gosling and Stephen Carell and some other stars as well, Margot Robbie, etc., they try to explain it in the easiest way possible. It was good enough to say I own a share of a company. Then someone came and said, yeah, but let's create a breakaway product which is going to follow this product and see if it moves. Now we have contracts, futures contracts, and it becomes a mess because everyone is greedy and trying to eat off. It's like Chiefs and Pirates are playing. Someone is going to bet on whether Chiefs and Pirates, who's going to win between Chiefs and Pirates. And then someone says they're going to bet on the odds of these people winning their bet. And then people add, but what's the goal difference? Someone's going to add, is there going to be a red card or not? And it becomes complicated and it's a mess. And some of these big capitalist firms, these trading houses, they invest in all these ancillary things that you, as the ordinary person, do not understand. And you end up losing money. And they don't even explain it to you. And even if they were, it would sound like Greek. You'd be like, what the fuck algorithm coding crypto garbage is this? So you're like, you're the expert, it's okay. It's like the tax people with the Tax Act, these thick books that have regulation on regulation, law on law, which when you ask a question, they will quote section 25S and section 2B, and you're like, it's okay. You're the tax guy, you know. So they can fuck around and chow your money. The number one reason why I do not believe in investing in the stock market, even though it's a noble idea, and shame, there are a lot of good companies out there that are transparent, that are good, a lot of good executives that are trying to do the right thing, especially by shareholders. There's a lot of decent trading houses with decent human beings who are not there snorting cocaine and trying to earn a bonus so they can buy a Ferrari, who actually care about shareholder value. What a lot of these companies have come to realize is they can extract all the value for the shareholder in the income statement. Some of them, of course, in the balance sheet through the liabilities. It's not an easy concept to understand, but I will try. A business sells a product, sells a service, and in exchange, they make an income. So in the income statement, you've got income at the top, you've got expenses at the bottom. So the income comes in. If you are DSTV, annuity income, subscriptions. So everyone signs up for a DSTV account, they get money. That's the one part. The other part is they sell ads on the different channels. So that's their income. They've made money there. The expenses, generally easy. If you are DSTV, you've got an office. People have to sit there. They have to get paid. You have to pay for computers, rent, infrastructure, maybe equipment, cameras, and the like. Some of your marketing, to get more subscribers, you have to pay for billboards and those kind of things. You have to pay your lawyers. You have to pay your bankers. You have to pay your accountants. You have to pay operations people on the ground, etc. You've got expenses that are there. And after your expenses, you've got a profit before tax. Profit before tax normally gets split because there'll be gross profit, general operating income, minus general operating expenses, just to run the business. Then there'll be unique expenses, things like interest on loans or loan repayments. Some of the income could be unique income, like income from other investments, investment income, etc. All those come at the bottom. Then there's things like depreciation, amortization, which are concepts that are not important for this video. And then you've got your tax. Tax comes, and then there's profit after tax. Earnings before income, earnings before interest, depreciation, taxation, amortization. There's these, Vusi Timberwire calls it EBITDA, EBITDA, whatever. These acronyms that finance people use to sound intelligent. Anyways, then you get your net profit. Your net profit is how much the company keeps for the year, how much they keep. And from that net profit, the executives will then decide, do we want to declare a dividend this year or not? Sometimes they defer and they reinvest the money, etc. This is our net profit. We are declaring a dividend of 2 cents per share, etc. And then you will see that. At the same time, you will see the value of the company, the market capitalization. Beginning of the year, during the year, later on, and you will say, my shares were worth 10,000, they are now worth 2,000 Rand, or they are now worth 50,000 Rand, whatever the case may be. So these dodgy people realize that we can play around with the income statement and the balance sheet. The income statement, and of course the balance sheet as well. How do they do this? This is meant to be transparent. What is unclear in your income and expenses is where some of the income comes from, where some of the expenses go. Now, there are people who, when they buy shares, Warren Buffett is one of them, Christo Visa is another one, Yanni Mouton, they want to buy enough shares so that they have enough of a voting right in the decision making in the company. Why is that important? Is it not enough to just buy shares? I mean, the company runs, you'll earn your dividends or the company will grow, your shares will grow, it's fine. No. They know that if I have voting rights, if I sit on the board or I have proxies, people that represent me on the board, I can influence certain key decisions that will sway certain things in my favor. I think Johan Rupert is another one. What does this mean in effect? It means if you're running a company like ShopRite, Christo Visa, this is now funky accounting, Marcus Jooste accounting and Steinhoff. Christo Visa's got a certain percentage of shares that he owns with value, whether he bought them or he earned them, percentage. There is no link with his voting rights. I'll give an example. Christo Visa might own 15% of ShopRite in shares. So if ShopRite is worth 1 billion, he has 150 million Rand worth of shares that are his. When it comes to voting on the board of directors, he has a 50% voting right. There's no link. If you have 15% of shares, the assumption is you'll be able to vote for 15%. Nah, he's created this thing, and he's not the only one, where he gets a higher voting right on the board. Why? Why would you want a higher voting right? One of them could be for things like when I want money, I will get to swing the vote of whether to declare dividends or not. And I will swing the vote on how much dividends we'd like to declare. If I don't want to declare dividends, I will decide, and all the other minority shareholders won't have a say because I get to swing the vote. When we speak about voting and coalitions and whatever, we're speaking about if the ANC goes to 40%, they want a DA or an EFF, which will help them make certain decisions that they want, which is why power is so important. That's the one part. The other part is when you get to influence the board, you get to decide what deals are made, and you get to decide which companies get to tender or win the tenders in your company. People know tenders from government. There are tenders, procurement in the private sector. ShopRite as a company maybe has a tender for cleaning. All the ShopRites maybe get cleaned by a certain external company. The security guards at ShopRite, all of that might be outsourced to an external company. All the people that work at ShopRite, the cashiers, etc., there's a human resources company, HR company, which maybe handles recruitment and payroll. That might be outsourced and it might not be in-house. The marketing for ShopRite to do the ads, all the ads you see on TV, for DST, there are companies that are paid. When you get to have a certain stake in the company, you get to decide who these companies are going to be. Obviously, in a public company, a listed company, it's meant to be transparent. It's meant to go to tender. They are meant to be quotations, all meant to be above board. But we all know the reality is these people make decisions behind closed doors, and they will whisper in their friends' ears, make sure that you price here, make sure that you do this, because when the decision has to be made, I get to swing the decision. And what these guys do is when you look in these companies, you realize that a lot of the income statement expenses, the stuff that's outsourced, goes to a lot of companies that either they have a stake in or that their friends have a stake in. It's like our government. Cyril Ramaphosa, Jeff Radebe, Fikile Mbalula, Gwede Mantashe, Pravin Gordhan. When you look at the tenders that go out in government and with state-owned enterprises, you realize a lot of these companies are either owned by their family, friends, and other associated people that maybe fund their campaigns. The same thing happens in companies. So that's what these guys have done. They've infiltrated these companies to make sure that your value, the income comes in 20 billion. By the time you look at net profit is 2 billion. 20 billion to 2 billion, which means 18 billion went out in expenses. And you're like, okay, that's fine. It's not fine. That 18 billion they've made sure has gone to a large chunk of it to their friends and their associates. And a lot of their friends and their associates sometimes even charge a premium on the services. So this Christo Visa, Warren Buffett, Bill Gates, Yanni Mouton, Elon Musk, when you're looking at the 2 billion net profit that is meant to go to their shareholders, they get a cut of that, of course, they majority shareholders. But they get maybe another 10 billion in the expenses through certain companies that are outsourced to. If my brother Penson has a marketing company, I make sure that if I own ShopRite, his marketing company gets the tender to do all our marketing. If my sister owns a cleaning company, I make sure as ShopRite that my sister gets all the cleaning contracts. If my wife, someone out there, has got an IT company, all the IT work at ShopRite will go to her. By the time you look at the 2 billion at the bottom, you'll realize all the people linked to me maybe get about 7 billion rand in the expenses. It's not my money. It's their money, but of course it's my money because I benefit from them in various ways. When you look at Johan Rupert as an example with Rembrandt Group, Remgro, you look at how many companies they're invested in. He will be invested in a company where the accountants, he has a stake in. Where the bankers, he has a stake in that bank. Where the marketers, he's got a stake in that marketing agency. Where the cleaners, it's incestuous. If you look at Brian Joffe's Bidvest, they get big government tenders. They get all the big private sector tenders. If you go into a bathroom, it's written Bidvest Steiner. If you look at stationery, you see Walton's or whatever is now owned by Bidvest. If you look at your toilet paper, if you look at the food that you're eating, if you go to the catering company, if you maybe are eating at a fast food restaurant and you're eating the chips, maybe they come from McCain's, you find out maybe Bidvest owns McCain or Remgro owns McCain's. It's incestuous, and these guys suck so much value from the shares that you as an ordinary shareholder are left with almost nothing. Even the interest on the debt that they have as a company is from banks that these guys own. And they in their financial reports, these thick books that the average person will never read, there are all these notes where they declare a lot of things, and it's meant to be clear that there's no conflict of interest because it was disclosed. Jacob Zuma disclosed that his son Tutuzane Zuma is working with the Guptas and maybe they supply a state-owned enterprise known as Eskom. It's above board, it's known, it's not hidden. Zweli Mkhize's son was involved in a deal with Digital Vibes. It's disclosed. When you look at paper, you're like, but guys, it was noted here in the minutes of the meeting. What do you mean? There's no foul play. It wasn't hidden. And you're like, what? Ubabu Sizwe Nxasana. I had the privilege of flying with him to Ethiopia recently. Ubabu Sizwe Nxasana, big business titan, big corporate titan, founder of, I think, the first black-owned accounting firm, Sizwe and Company, which became Sizwe Nsaluba Goboto, when they merged with Nsaluba no Goboto so that they can access certain government tenders. I think Transnet was one of them. By the way, your government, Cyril, Pravin, have sold a piece of the port, the biggest port in Africa in Durban, to a company in the Philippines. The things that Jacob Zuma was accused of, selling our company to the Guptas, Cyril, Pravin, and other ANC leaders are doing it now. They are selling pieces of the South African Airways, Transnet now. We're going to see Eskom, Petro SA. It's coming. It's coming. Sizwe Nsaluba Goboto, they had a tender. Anyway, Sizwe Nxasana eventually at some point became the CEO of First Rand. First Rand has First National Bank, I think Rand Merchant Bank, if I'm not mistaken, Momentum Insurance, I think Outsurance as well, etc., etc. All these financial services companies. He was the chief executive officer. Brilliant corporate, chartered accountant, vast experience. The auditors of First Rand were SNG. Sizwe Ntsaluba Gobodo. Sizwe Nxasana is the CEO of a company, had that company audited by another company of his auditors. Sizwe Ntsaluba Gobodo. Conflict of interest? No, man. Obviously, you disclose these things. It's above board. We said it. And according to finance graduates, like, well, it was reported, therefore, and you're like, that's not good enough. It's not good enough that Cyril Ramaphosa, his brother-in-law is Patrice Motsepe, his other brother-in-law is Jeff Radebe, and it's above board. Jeff Radebe gets to decide on who gets the energy, the IPP, Independent Power Producer contracts, licenses. His brother-in-law, Patrice Motsepe, gets 12 of the 25. His other brother-in-law, the president, has a company called Shanduka, which is also invested in all of these. And Glencore, which is supplying, but it's above board, guys. Everyone knows. He wasn't bribed backdoor. It wasn't hidden. It wasn't a bribe. It was above board. That's not good enough. So my point was this. A lot of the companies that we have today, a lot of the share value is being extracted in the expense column and sometimes in the liabilities because they load a lot of these debts that are frivolous, and where a lot of those debt repayments and the interest is for an associated company bank that backdoor benefits them in some way. You've got Tito Mboweni, who was the Minister of Finance, today sits as an advisor at Goldman Sachs. He sat as an advisor before in a property company at some point. He's good friends with the fund sales, ZZ2. You can imagine how many favors he's done for those people. Pravin Gordhan has got shares in a lot of companies in this country. You can imagine how many favors he does for those people. Cyril Ramaphosa with Shanduka and their joint ventures and all these things. You can imagine how many favors he's done for those people. By the time you buy a share for 10 Rand, if you're going to benefit 2 Rand, you must know that these guys have extracted 30 Rand already. And you're going to get peanuts, but they're just trying to use you to fundraise. It's like when you invest in retail savings bonds for the government. They pay you a return. It's great. Sometimes it beats inflation. These days, it's not. In reality, they use that money to generate a lot of value. And by the time they spit out peanuts, it's little. And a lot of the reporters will not tell you how much value has been lost. A lot of people, a lot of you guys that work in corporate, you've got pension funds, but you're not tracking them. You don't know every quarter how your pension fund is doing. You're like, I'm investing. It's doing well. I've got a portfolio now of 600,000. Your portfolio maybe is meant to be worth 800,000, but you don't know you've lost 200,000 in value because it was invested in Steinhoff, because it was invested in certain companies that have now closed down, because it was invested in Sisa Ngebulana's Reboses, which is seeing flames right now. You don't know because you don't track. You don't know how much dividends you earn. You don't know how much of the dividends are reinvested. And you don't even know how much the company that is looking after your pension fund, you don't know how much they earn in fees and how much they pay themselves in bonuses. You don't attend the annual general meetings. You don't vote anywhere. Of course, you're also minority shareholders. Who the hell cares about you? You don't know who's meant to take care of the minority shareholders at the AGM, who's meant to be fighting for you. You might have inside information in your company. You know this foul play, but you've never even thought of reporting it because you're actually invested in that company. And your money that you work hard for is being managed by so many other people out there, and you're losing value. The Johannesburg Stock Exchange has not been doing well. The all-share index, the ALSI, the top 40, has been getting murdered over the last 5 to 10 years. The JSE has been having a generic return of minus 10%, minus 9%. What does that mean? It means if you'd invested R1 million at the beginning of a year, and the ALSI, and you'd invested in the ALSI, the all-share index, and end of the year it had a minus 10% return, that means your R1 million at the beginning of the year, at the end of the year is worth 900,000 Rand. And even less if it's being managed by other people because they charge themselves fees. And if somewhere in the portfolio they did well, they paid themselves bonuses as well. So maybe your R1 million is now worth 850,000. But you're like, I want a share portfolio. And these things are complex, and they're meant to be made complex, and they're not meant to be easily accessible for the average person, because these finance guys, what we saw with what happened in America, with 9/11, These, what they call Wall Street in South Africa, it's the Sandton guys, that the RMB, First Rand, the trading houses. These guys are just there to milk your money. They pay themselves fat salaries. I was in banking, boy. I understand. The private banks, your Investex, these guys pay themselves really well. They don't care if you're doing well or not. They don't care. They have got these targets they're meant to maintain, but you don't really track your money. You're not in control of your money. You're not in control of your tax. Government just takes. And then your pension, your company just takes, gives to their mates. Your mates do whatever the fuck they want. By the time you retire, you can't even extract all of that money, and you get taxed on it again. And then these companies that are meant to be acting bona fide in good faith, they're extracting all the value, boy, and they're chowing it for themselves in the income statement and in the balance sheet. What do I suggest? One thing to complain, but we have to offer solutions. Number one, I forget this gentleman's name. I want to get his name. I want you guys to go and watch. I think they've changed the name of this channel. It used to be called Kosher Money on YouTube. I think it's changed its name. I just want to confirm. Yeah, it's called Living L'Chaim now. L'Chaim is LCHAIM. Living L'Chaim. 185,000 subscribers on YouTube. This guy, Eli Langer, who interviews some amazing Jewish leaders, business people, etc. There's a really great interview with Manis Friedman, who's just a great mind. Just listen to him. The Secret to Becoming Truly Rich. The thumbnail reads How Money Works with Rabbi Manis Friedman. But I want you to listen to Naftali Horowitz. Naftali Horowitz, Building Wealth. I think he's got more than one video. There's another one here called Wanna Invest Like a Millionaire, Strategies Revealed. Naftali Horowitz. One of the things Naftali says, Eli asks him, should a person get a money manager? Naftali says, look, managing money's work. You have to study this thing. You have to track this thing every day. And for the average person, they don't have the capacity or the intellectual ability to do it. So for them, they must get a money manager, and you must get one that's referred. By referred, if someone says, get this money manager, it must be like, this person's helped me grow my portfolio by 10, 20, 30% per year over 10, 20 years. They come highly recommended. Something that we don't do with our politicians. You can't say, this politician has done this work. I recommend you vote for them. Look at the work they've done. Get a money manager that it can't just be, I work at Old Mutual, I'm at Investec. Therefore, it's not good enough. What is your return? What does your portfolio look like? Are you doing well? So he says do that. And he says for people like himself who is invested in the game, they do it for themselves. So do it for yourself. If you're interested in trading stocks, if you're interested in investing, whether in the medium or short term, spend time learning how finance work. Attend short courses if needs be. Study some of these videos I'm telling you about. It's boring. It's fucking boring. But if you care about making money and looking after your heart, because you fucking work, you're stressed, you struggle, you wake up in the morning, you have to stress late at night, and every rand that you make, you would like to preserve and protect, and you'd like to grow it. So as much as you're stressing about how you make your money, stress about how you preserve and grow your money. So learn. Spend time studying, spending time, maybe ask for consultations with myself and let's chat about money. It's one of the things I've kind of dropped the ball on. I need to host these seminars, these workshops where I'm educating people on what money is, how money works. You can read my 2 books, Fuck Fear, the Rise and Fall of the NSC. 3 books, Fuck Fear, The Rise and Fall of the NSC, and Passive Income. Basic financial literacy. There are so many accounts on Twitter where people are teaching other people about money. People like Nicolette Mashile. Samge. Is it Samge? Samge is one of the people, Gerald Mondiambira, who I've had on the panel show as well in South Africa. There's a whole lot of other people in South Africa that educate on money. Jason Lee, I think his name is Jason Lee, has got the book on investing in property in South Africa, which he revises every year to edit for tax, the tax examples that he makes. Read Rich Dad, Poor Dad, Robert Kiyosaki, read The Range. Read some of the books on Warren Buffett's investing. Study the market, watch Bloomberg, watch CNBC. Watch CNBC Africa. People like A lady I went to varsity with, amazing, Fifi Peters, does amazing work on CNBC Africa, educating people like another lady. So I was with Ufifi at Rhodes University. I was with amazing woman. She's on radio now. Hey, she's going to be so sour that I forgot her name. This is what I was saying about taking time out to just remember some of the things. I know she's on Kaya FM. Kukumfupi. Yeah, beautiful, beautiful, well-spoken lady. I was with her at UJ. People like Kukumfupi, very knowledgeable. Very, like I said, Bruce Whitfield earlier. Speaking about money matters. Learn how the game works. And then once you've learned the technicalities and attended the short courses and maybe booked consultations with me, etc., then start learning the softer things of what influences companies. Read some of these sideways articles where you learn about some of the dodgy trades and whatever, so that when a company announces something, you read between the lines. You're like, there's something fishy here, or there's an opportunity here. You know, these people drop some nuggets. I think I must invest here because I sense something, and then be able to connect the dots. Tesla's just linked here. Zimbabwe has just said they're open for lithium production. Something's happening in the DRC. I see what's happening in Dubai. Try and connect the dots and see where are the opportunities. And if you can, travel or spend time with people who travel and ask them what's hot on the ground. What's happening there in China, Ben? You're in China. You're in South Korea. What have you seen there that we haven't seen here, or that maybe is still coming here? And I'll be like, e-bikes are the new thing. Electric bikes. If you can invest in e-bikes that move away from petrol, diesel, that you charge at home like your phone, e-bikes are the new thing, because we had the tuk-tuks at some point. And shout out to my boy, when you've got so many things going through your head. Serious rugby player. His name will come to me. It's actually a Islam. He's a black Muslim. The other thing I'm going to have to deal with as I get older is like having to recall information and knowledge, because I've got so much of it. And as you get older, obviously your memory is not that great. So then it starts falling by the wayside. Uncle Penny, I'll fucking step you into tomorrow. I'll remember his name. Sorry, please allow me. I just want to search something here quickly. Played Craven Week, actually. Craven Week. Bongi. Sbongiseni. You see, now when I also start drawing the links, it tickles my brain. Bongi Gnani was invested in tuk-tuks. But e-bikes are the new thing, I went on a tangent and I apologize. So study if you want to invest. Because the reality, and I had this conversation in our rugby WhatsApp group with, is it Jeremiah? I need to say these names because it's actually important to kudo people. Is it Jeremiah? There's a serious Jermaine, sorry, it's Jermaine in the rugby group. There are guys that are very knowledgeable. It's just they work in these cubicles and they don't get to speak out there. And part of my responsibility as a YouTuber is going to be getting more of these guys to sit on platforms and talk about money and try and simplify and break money down so that we can increase financial literacy for the average person that doesn't understand technical terms, jargon, topics. He was saying, look, the reason why he invests in the stock market is because one of the reasons you make money, or one of the reasons you're meant to make money, so that you can take your money and make it work for you. And the easiest way to get your money to work for you is to invest in a share. If I take 1 rand and I put it into Batu as a company. I know that Theo Baloy and the guys at Batu will take my 1 rand. He will put all his employees to work, the shops, the selling of the sneakers, the brand will grow, something that I'll never be able to do on my own. And then my 1 rand will earn maybe 2 cents from the work that Theo Baloy and the team at Batu have done. And the more companies you invest in, the more your money can get other people to work. You can then chill at home and be an investor, have a portfolio and a trust. And there are people that wake up every single day. Chicken Licker, Nando's, KFC, they go and work at Cresta, Santon, they're at Oceans Mall, Vivian Reddy, the Pearl Mhlanga, they're in Cape Town, Camps Bay, working at a restaurant, driving a taxi, working at a fuel station, working at a bank every day. And because you've got shares in those companies, these people are working for you. And your hope is that because they're working for you, your shares will gain value and you'll earn some dividends. And like I said, if you can get to a portfolio of 100 million rand and you invest in the right companies, and maybe you're earning a dividend of 3% on the 100 million, every year you're getting 3 million rand that you can live off of. Obviously building a 100 million rand portfolio is not easy, and investing intelligently is not easy, even if you get a money manager. A lot of these big guys, LeBron James, Beyonce Knowles, Cristiano Ronaldo, they have money managers that manage their funds. But you don't have to work. Your money then works for you, which actually means other people are working for you. That is the reason that you invest in the stock market. I told you why I don't, because I believe that a lot of these greedy guys have made shares not as valuable as they used to be, or that they should be as well. Shares, learning, Jermaine, that's the reason why I invest. Alternatively, I think the greatest investment you can ever make is in yourself with active income. What does that mean? It means if you have 10,000 rand, I would suggest instead of putting it in some share portfolio that you do not understand, you don't know the fees, you don't know the companies, take that 10,000 rand and learn a skill. That skill could be learning how to cut hair, how to style hair. That skill could be learning how to sew with a machine. And that 10,000 rand with that skill, with active income, you'll be able to go and do people's hair and get that 10,000 rand back. Once you maybe have that skill, then take extra money and buy equipment. Maybe if you can do hair, now you start buying hair clippers, or you start buying machine for a hair salon so that other people can use your equipment. Buy a tent and rent it out. Buy mobile toilets. Invest in yourself and invest in assets that other people can work on your behalf. Buy a rental property and let an estate agent work for you and make that money. Something that you can control. Increase your financial literacy, increase your knowledge. Attend property seminars, attend seminars on the stock market, attend seminars on how to grow your money. Invest in yourself and learn these skills. And then later on, once you're skilled enough, once you've studied financial statements, that's another important thing. Learn how to read financial statements. Warren Buffett, Yanni Mutona, guys that are masters at that, they can read financial statements, understand them, read between the lines, and then calculate if a company is undervalued, overvalued, and therefore they will know with the earnings per share that this company is worth more than they're reporting, or it's worth less. I will not invest. I will not touch it. Learn, read financial statements, and then play the game. It's a game at the end of the day. But invest in yourself, and the returns will be so much higher. And then once you are fully knowledgeable, once you are skilled, once you've made enough active income, Beyonce makes active income by singing and dancing, then you'll have so much money. Trevor Noah makes active income by cracking jokes, doing stand-up comedy, being an MC. Then you've got so much money that you then invested in passive income, where the money then starts working for you in spaces that you understand. If you understand the hair industry, you will say, I will only invest in companies that have to do with the hair space. I will invest in companies that import weaves. I will invest in companies that manufacture hair products. Jabu Stone, which reminds me, I met Jabu Stone at the Dr. Umar Ifatunde gathering in Davidton. This is a note to self. Contact Jabu Stone. He gave me his number. I need to have a sit down with Jabu Stone, one of the legends, legendary entrepreneurs in South Africa, so he can tell his story as well. Like people like Herman Mashar with Black Like Me. Today we've got Likao, we've got Theo, we've got DJ Sbu. Shout out to DJ Sbu and Robot Boy for their new green, more fire flavor. Like I said, I'm passionate about business and the economy, and I can speak about business all day. I don't research it as much as I'd like, but I'm still abreast of certain movements, locally, internationally, etc. As I was traveling in South Korea, as I was traveling in China, as I was chilling with Unkuns in Africa, walking the streets, I was explaining to them how companies work, because it's something that I've always done with the kids. I was explaining to my mom, this business is linked to that. I was showing her, these companies, McDonald's, KFC, Burger King, these are American companies. When they invested here, the money's moving. That side, Paris Baguette, Dunkin' Donuts, these are Korean companies. This is how they operate. When I was in Korea many years back, there was Samsung Motors. I realized there are no more Samsung cars on the streets. I went and I researched. I realized Renault from France bought Samsung Motors. It became RSM, Renault Samsung Motors. And then they removed the Samsung name and they now just Renault Motors. And you study these things. You look at the cars that are moving, the Hyundais and the Kias. I'm constantly plugged in. Constantly. I'm aware. So I can sit with anyone and they're like, do you think this is a good investment? I'm like, just from what I'm seeing out there, this is my feel. When Cyril Ramaphosa announces something, I want to look at the Philippines company now that has been given a stake of the port in Durban. I want to study these things. When they speak about Richards Bay and the harbor there and all the coal that's moving, I want to research. I want to study Glencore in detail. Do the history of Glencore. Understand who's at the helm now that Ivan Glassenberg has stepped away. Look at what's happening with Tesla. On my social media, my Twitter, my Instagram, my Facebook follows Bloomberg, business news, what's happening, what's hot on the streets, what's the haps. I'm plugged in. I'm constantly researching and reading and finding out, and I can speak. And a lot of these things are integrated: politics, business, economy, etc., power games. And then some of your favorite celebrities, they're striking in Hollywood right now. Who does that affect? What does that do for certain stocks? Mission Impossible, Tom Cruise has just dropped. Does that affect? Stir Kinnico was under business rescue recently. What does that mean? I'm constantly plugged in. Anyways, I've just shared some of my thoughts on why I don't believe in investing in the stock market. I hope I've explained why it would be a good idea to do so. And I hope I've exposed some of the people that are problematic in the game. I've advised you on how to get involved in the stock market, that you must do your research. Shout out to people like Easy Equities, I think under the Purple Group, that have made investing much easier. Shout out to Standard Bank as an OG that allowed people to invest in shares very easily. Today, they've also become a pioneer in allowing people to invest easily offshore, because it was always difficult to invest in companies overseas. Standard Bank has done that. And look, as I grow my brand, one of the conversations I'm having now is how to work with brands and sponsors. A video like this should be funded by the banks. It should be funded by the trading houses. It should be funded by the platforms like Easy Equities, Standard Bank, because this is free mileage for them. And they need to pay me. And even if I'm criticizing them, of course, I can always say, look, for other people that are interested, these are the platforms for you. This is how you play the game. And especially when I sit down with more business people, entrepreneurs, hopefully some of the episodes will be sponsored. Sponsored by Capitec, sponsored by Investec, sponsored by First Rand, sponsored by whoever. And we have an engaging conversation, and I ask difficult questions. And I bring in my own experience, my own examples, and we bash certain parts. But then we have a fulfilling educational conversation. And then hopefully the brand that works with us will get a lot of people that will click on the link, learn, get involved, engage. And if we can get more people to be financially literate, especially the poor black masses, we can get more of them to engage in the economy and to play the game and to decolonize the banks, the financial institutions, so that they serve African people, so that they can serve the African economy, so that we can build the Silicon Valleys, the Dubai, the Hong Kongs here, because we now have people that understand money and they understand how the game works. Penny all the black pen. Catch up with you guys again soon. Cheers.